Welcome to Top Line, the podcast for the best founders, operators, and investors in B2B tech. Every week, AJ Bruno, Asad Zaman, and me, Sam Jacobs, will break down what's important for you to know to be the most well-informed professionals in the market.
This episode is brought to you by Accel, the AI-native CRM built for the next era of companies. Connect your email, and Accel instantly builds your CRM right before your eyes with every company, every contact, and every interaction you've ever had, enriched and organized. With Accel, you can build AI-powered automations and use its research agents to tackle complex operational processes like finding key decision makers and triaging incoming leads. Join industry leaders like Flatfile, Replicate, Modal, and more. Just head to attio.com/topline and you'll get 15% off your first year. That's attio.com/topline for 15% off your first year. Now back to the show.
Hey everybody, it's Sam Jacobs. You're listening. I believe this is Top Line 106. Asad, is this 106 or 105?
It's 106.
Amazing. You're joined today by two out of the three amigos and musketeers. It's me, Sam Jacobs, CEO of Pavilion, and Asad Zaman, CEO of Sales Talent Agency. And we've got Eric Wilford on the show. Eric is a venture partner at Accel. And we're going to be talking about the state of venture investing, the state of the macro. Does the macro play a role when it comes to the micro? And of course, we'll be talking about IT and the rollout of AI and the rollout of AI across the enterprise. Eric is as I mentioned, he's a venture partner at Accel. He's part of the enterprise IT and data-driven software investment team and works with founders across the enterprise stack, from next-gen analytics platforms to emerging cloud security and threat detection companies. Prior to Accel, he served as president of products at Riverbed Technology, where he oversaw the growth of Riverbed's flagship WAN optimization and app acceleration platforms, which grew to be a $1 billion business. He graduated from Pepperdine, and he has an MBA from NYU. Eric, welcome to Top Line.
Thank you, Sam. Nice to see you.
Nice to see you too. Thanks for joining us. We're excited to chat with you. First, we'd like to get a quick temperature check. Asad, how is Toronto today?
Toronto's fine, but I didn't sleep much last night. I had, when children have growing pain in their legs, I had that all night last night. So I was up all night.
Did you exercise? Did you work out your legs for the first time in a long time?
No, I regularly exercise them, but I think I overdid it recently. But it was really bad. I could have cried.
I'm sorry to hear that.
Yeah.
Eric, how are you?
I'm doing great. I'm exercising regularly. I'm happy to say it's necessary.
How did you sleep last night? What was your Oura Ring score?
I can't share that.
We're excited to have you on the show. Asad, why don't you kick us off?
Okay, so we have a lot of things to discuss, Eric. But the place I want to start with is this question that's been floating around in my head around what is an AI first company? You talk to investors and they say valuations, there's a bifurcation between companies that are AI first and companies that are not AI first. And it kind of theoretically makes sense. But then you say, what's an AI first company? And the answers are quite wishy-washy. And it's like, well, is it that it's post ChatGPT? If you were created post ChatGPT, you are AI first, but it can't be because some of these companies like Codium were created pre ChatGPT. So then what makes or doesn't make a company AI first is, I think, something we all are thinking about, and curious to get your thoughts on that.
Absolutely. I have lots of thoughts. In fact, I share some of those questions you have myself. And as the older guy on the call right now, it's not the same.
I'm pretty old. I don't know about that.
It's not the same as the cloud. I think it's bigger than the cloud, but you can look back at the eras that have happened, the internet, the cloud, and how there was a lot of cloud washing and internet washing during those times. And so I think there's a desire to have that clean piece of paper, given this new phenomenon, given the magic moment has happened, right? There was a magic moment. We all experienced the magic moment, and we'd all known about AI and ML. In fact, I invested in quite a few companies that were doing a lot with ML and AI prior to the magic moment. But the magic moment kind of lifted something off of everybody's head, and possibilities existed. kind of in the way that everything was going to be in the cloud. And, I remember Larry Ellison being exceedingly frustrated over that it's just memory and processors and chips. It's all the same thing. Nothing's changed. It's just marketing. Yet something intrinsically changed about how IT was going to be consumed and how it was going to be delivered. And so I think that's the same type of phenomena that's happening right now since the magic moment, which is just that, man, you take a clean piece of paper, given that this reality exists, and it can contribute so broadly across so many different dimensions. There's a desire to be on the front end of that clean piece of paper. You think AI, you do everything yourself with AI. Your product is centered around, it's not a bolt-on. So I remember when cloud was there, people bolted cloud on to their on-premise solution. You know what I mean? It was just sort of a management system that was in the cloud, not the core system. It stayed on premise. And so that wouldn't be cloud native. That would have been a cloud bolt-on. And so here it's the same type of desire, which is part cultural. It's quite digital native. What's a digital native? They're all Gen Z. Gen Z are all the digital natives, right? And so it's sort of that kind of, it's hard to put your hands around, which I understand. It's hard for me to, but there's something in the ethos around someone who is a AI native that thinks and acts and does everything centered around how that can impact how you create a business, how you create a product. And that has a lot of appeal for those of us who are pattern matchers. And so
do you think, Eric, do you think a company, like let's say there's a seed stage company that was building enterprise SaaS, probably something that you might look at investing in, but it's seed stage, it's early. Let's assume that, they're not deployed across 50 different production environments, and they caught the memo. Maybe they listened to this podcast. Maybe they listened to a different podcast. And in one moment, they changed the pitch deck. And what was before an enterprise SaaS solution is now your AI co-pilot for instant blank use case. Now, on the one hand, you might say, well, that's sort of cynical. That can't possibly be true. But on the other hand, if you assume that, sort of like parroting or echoing, I guess, what Satya said, like if AI is the application layer or is the interaction layer between the database, which is, what Satya dismissed as enterprise SaaS, and, the user, then it also is possible that an enterprise SaaS business could pivot in some way to become AI native, because if you just say, hey, the primary interaction mode is a natural language interface that you can use that's built on some kind of open source LLM, then it's plausible that you could be AI native, even if you've been around for a couple of years looking for your product market fit. Does that sound deeply cynical to you, or does it sound like that's the nature of startups?
No, I think it's very real that can be. It's just the level of commitment that the company makes to it. If it's like an option, then it doesn't strike us, or doesn't strike me as you're core committed to it, as opposed to this is the future. This is where we're going to invest all of our energies into. And believe me, there's not a pitch today that we don't get that doesn't have AI in it, right? This is
probably
zero. You know what I mean? They're all either in support of, or they're using it, or complementing it. So I think we've
maybe that, like just clicking into that. So assuming that 100% of pitches, maybe let's say 99% of pitches,
99,
let's say 99, right? There's still some strong-willed people that are holding on to the old way of doing things, but 99% have some type of AI in what they're doing.
Yeah.
So then it becomes really difficult to say, is this AI native or not, right? Because that was a really interesting word that you used, an AI native organization, which almost speaks a little bit to how they do things internally more than what they do externally, right? So would it be possible to then say that, because we like quantification, we want to be able to quantify if this is an AI first company or not.
Yeah.
Would it make sense to say that a true AI first organization, you learn that by how they're using AI within their organization, and that should be stuff that you are able to quantify? Maybe the pace at which they're releasing products is much faster than the traditional pace of releasing products, right? The quantity and the volume of what they push out is different, and that is something quantifiable you can latch onto. What do you think of that?
You're spot on. I think I couldn't agree more. It's also, there's one of the things we have to do, if you were investing as an investor or as a person raising money, you're judging the person and the authenticity of the person's claims. And
Yeah.
so the authenticity of the person's claims are manifest in the thing you just described, but they're also manifest in the person's history. You
Yeah.
just keep talking about where'd you come from. Origin stories are beautiful. They just disclose a lot, and they're just the truth. We're if someone origins someplace totally different, is hyperspaced into this, well, we're gonna you know what I mean? We're gonna have a little bit of more skepticism on how into it are they, and how confident. Now they can win us over for sure,
Yeah.
because any individual has the potential to flip and do
Give
whatever.
us an example of that. Like, what does that look like in real life? Where's the person coming from that has created that skepticism? And then how the ones that have overcome it with you guys, what have
Sure.
they shown? What have they said? What have they done?
A lot of them have some sort of, whether it's AI or ML, they have some sort of appreciation for how that type of approach has improved other things, and they've experienced it firsthand. So I would say that's a lot of credibility. They can talk about some of the shortcomings of maybe pre-magic moment. Do you follow me? And
Yeah.
they can speak intelligently to the good of it. But it was ML. Here's a great example. ML, really good, narrowly defined, very narrowly defined. And it was give very precise predictions and a narrow definition, but not as good broadly or generally. And so to the extent they can talk about that, that lets us know that they have their hands around the edge. The second thing is these digital natives, or let's call them the AI natives, they are obsessive about trying and testing the latest and newest blah, blah. You know what I mean? The newest model, the newest version of the model, the newest, code assistant tool, the newest image generation, the new, whatever it is, it just, I don't know how to say it. It just bubbles out. So rather than having a checklist of 17 things, am I immersed by that or am I not immersed by that?
Like, are they at the tip of the spear or not?
Correct.
Right. Yeah.
And does it infuse them? Does it enliven them? Does it excite them? Does it animate them?
And have they developed a perspective based on that? Like, do they have a take on where something's going? Sam, building on this point of one of the ways that an AI first company will be different, we spoke about this last week as well, is just the pace at which they can ship things. Like, they will produce stuff faster than we've ever done before. And that's quantifiable. It made me question the following. Traditionally, when we were taught to SaaS founders, you're trying to not overly customize your solution per customer, right? Like, there's this resistance. Like, we want to be able to figure out a market where what you've built you can sell with minimal customization. Do you think there's a shift happening there then, where if it's easy for me to ship, if I can build things faster, customize things faster, probably have agents do some of the customization in a little bit, we'll have a lot more customized software coming out that is very, like, we bought an ATS system about a year or so ago. And I asked them about this feature that I wanted, and it was like 18 months minimum before we can get there. Like, does this become a thing where we can just ask for things and get them a lot faster? What do you think, Sam?
I think 2 points. One is a long-term truth that still exists today, and one is exactly what you're saying, which is that the technology completely enables a much more rapid development of the long tail. Do you follow me? We always talk about the long tail of development. That's still, even though that's all true, there's a discipline around product market fit and sequencing and prioritizing that doesn't go away even in the AI world at this moment. Now, maybe in some future AI worlds, it does go away. But I think that's a little bit of now AI washing. Like, it's going to magically accommodate the full long tail today. And unfortunately, you still have a go-to-market machine that you have to go after. You have to use. It's not just about the product, right? It's about a product market fit. And so that product market fit and the thought processes that they use and show some discipline with, I'm going to do product-led growth. And I'm going to come from the bottom in, and I'm going to do blah, 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 blah. And is your product lended well to that? Are you seeing that they're doing that? Is it moving quickly? And then all of a sudden you say, I'm going to go sell Citibank. You know what I mean? And it's like, that's going to be tricky. You know what I mean? Because those are two different go-to-market motions. So even, this is what I mean. Some things are old. old thoughts around product market fit still being very important. Prioritization, sequencing still be, so you can't go, AI's here, I can do everything for all people all the time. I hate that. We all hate that,
Yeah.
because it's just not, it just doesn't work that way. Still today, you have to focus, and then you can conquer the world, but you have to sort of conquer it in a sequential, and you can paralyze a lot. I know I'm saying sequential. You can paralyze a lot, but you still have to have your sort of world conquer plan sequenced coherently around product market fit.
Interesting.
I think, Asad, however, I agree with what Eric said, but I do think I was literally thinking something along the lines of what you were saying as you were describing it, which is, if AI is a spreadsheet or a calculator, or is a pad and pencil, that's a very different thing to sell to Citibank than an end solution.
Totally.
And so I think it's much. I think we're going to see a couple of things, and one of them is I think there's going to be an evolution of like the concept of product market fit, because I think it is going to be about exploration and capability in a way that isn't obvious to us, to the point of how we're used to building software, which is, and there might even be a part where the role of product management has to be reevaluated, because the product manager, is typically like the architect that's connecting the development of the product to the end user experience, and serves as like the bridge between the two things. But if really what you're telling the end user is it's about your imagination and it's about what you're capable of, I think the role of the product manager, I'm not quite sure exactly which direction it evolves into, but I think that as Eric was speaking, I mean, there's a difference between selling NetSuite and selling a calculator and a spreadsheet. And those, the calculator in the spreadsheet is, here's 25 different templates of things you might consider doing. But by the way, you can do anything you want. You can build a net worth statement on it, and you can also build a financial statement, and it can be a list of all the people you know in Buffalo. And, which is basically what I'm describing is a database, but that's what a spreadsheet is. So I do think that, and I think there's going to be an evolution of the concept of like technical debt. There might even be this evolution of sort of like what latency you're comfortable with, like what vestiges of things that are like still in the code base or still use cases that haven't been explored, but are artifacts that you're comfortable tolerating exist, even though they're not contributing to like the core use case, in a way that I don't think you would allow in a traditional enterprise software development sequence, because it would be too obstructive. I don't know if any of that makes sense, but I was
Sam,
literally thinking what you're talking about.
You're starting to speak like an AI native, Sam. You're asking questions like an AI native person. I'm very impressed. I'm going to give you a red badge of courage.
Well, maybe I'll try to raise money from you, so maybe you can give me some. Eric, I've got a question. Permit me. It's just in the headlines. I'm reading the headlines every day, and it's not a political question per se. It's just a question about what's your perspective. There's obviously an easy answer, which I'd like to steer you away from, which is, we're venture investors, we're early stage, we're deploying capital over 20-year cycles, and we don't even read the headlines. Wait, who's president? I'm not even aware. Does the macroeconomy impact your investment cycle in any way? And are you seeing, perhaps in your existing investments, I'll tell you what we're seeing, or what I'm seeing in the business world, is I am seeing a lot of delay. I'm seeing a lot of people had a great Q1 and are a little bit nervous, and there's a paralysis that's seeping into purchasing decisions. What are you seeing, both on the check writing side? Has it caused you to pause any investments? And what are you seeing in the portfolio?
Yeah, I think you articulated really well, because Q1s were, normal is a tough word because there's a broad range of normal, but it definitely wasn't like, oh my gosh, we're in a recession mode. The longer that this instability and this volatility persists, the more the questions come into everyone's mind. Oh my gosh. And so we're all derivative on the oh my goshes around, is there going to be a pullback in spend? Are we, is this going to trigger, holy cow, the worst stagflation, you know what I mean? Where we get the worst of both worlds. And so, yeah, I would say that the second quarter is a question mark on, will that pullback start to happen? And to the extent that pullback does happen, it just has a domino effect. And it always starts with the late stage funds, then works its way down to the early stage. So the statement of where are we at this very moment? I would say, there's question marks that are, starting to appear. We haven't seen yet in our companies the misses that are so indicative of that. But there's that, you know what I mean? What's happening is the CFOs are putting their hands, on the till, and they're just, getting ready. I don't think they're there yet, but they're getting ready because they're still hoping that there's going to be some stabilizing. That there's still good things that are happening too. So it's not like it's all negative. There are good things in the macro economy as well. But and then if you're down at seed and A, there's an era of AI that is massive, and so I'm not so sure there's any slowdown there.
I guess that's an interesting place, because on one side, if you're a Series A company or even a seed round company, it doesn't really matter if there's that much volatility. You're trying to find $1 million in revenue, $2 million in revenue. Correct. You're selling the most cutting edge thing on earth. You should be able to grind your way to that. The other side of it is, there's this term vibe coding, but there's also this vibe revenue that's out there. Like when you talk to these AI, right? Like when you talk to these AI companies and you ask them about what these deals are, or you ask buyers, like, what's your thought process when you're buying these things? The word experimentation comes up. We're just trying to experiment. We're in the field. We're doing things. We're trying to learn. We're trying to figure this out. And then they count it as like real revenue, right? On the AI side, the company is like, we've got 10 million in revenue. It's like, you've got 10 million in experimental revenue. I don't know if this is ARR per se, but does that experimentation go away? Like if you're a mid-sized company that has a budget for experimentation today, do you stop experimenting because all of this volatility is happening? And that should have a downstream on these seed, Series A, Series B AI companies. What are your thoughts on that?
Yeah, that's probably true in the middle market, especially for offensive motivation. But for defensive motivation, I think it still keeps going, because as you start to crank, you got to do things cheaper. You got to do things more economical.
Interesting.
So
how would you define those two things? Like what falls into offensive versus defensive in this instance?
Well, suddenly you can do something at one third the price, because you're using this app that gets rid of 5 accountants.
Yeah.
It just.
Oh, so for them it could almost be like tailwind.
Potatoes.
Yeah.
Right? I mean, they spike in a recession, right? So it's that same pattern. We experienced it when I was running my company. We totally experienced that. The Great Recession, 2008. We got lots of buyers because we could save people money, and so that's what carried our value prop, shifted from offense to defense. And so I think there's a similarity here that you're pointing out correctly, that if there is a wet blanket that comes, this triggers a wet blanket on the macroeconomy, then offense gets pulled back. But I don't think defense does. I think defense they're cautious about it. They're not like, as you said, vibe. They're probably not vibing. They're probably thoughtfully considering things that can reduce.
Yeah. There's a little bit more thought.
It's thoughtful. But again, that is still contained within a very big movement of the AI era, which will be greater than this macro, whatever this macro is. The AI era will persist, and we all know macro cycles. Boom, they go up, they go down, they go up, they go down. They resolve. I wish I could press the buttons to make them resolve. I don't know how that all works. I'm not a macroeconomist, but just looking.
Well, actually, in this is the one time when it's actually easy, because a button, push the button.
It does seem. I agree with you guys. It does seem easier right now, but I don't want to put myself in a spot where I'm not an expert. But I do know that the AI experimentation, particularly at bigger companies, it's going to go on. It's just the era's too big.
And certainly, to your point, if there's operational efficiency, the forces of operational efficiency of AI automation and offshore labor are only accelerate. They will be pulled forward. To your point, Asad, you introduced us. What is it? Hire Boost.
Yes.
And, Eric, Pavilion's a community. We can't afford to have a huge customer success team at $2,700 price points per year. So we're looking at AI, of course, but there's labor in Argentina and Colombia at $1,500 a month. Yeah. Native English speakers, college graduates, talented people.
Yeah.
I can hire 4 or 5 of those people, and they can call every single one of my members once a quarter in a way that wasn't possible. And we're definitely going to do that regardless.
It's a global
of
marketplace.
Yeah.
The genie doesn't get put back in the bottle. It's a global marketplace.
I guess within this comes up another question of, if this is, we are used to this world of startups being valued based on ARR. And there's a certain understanding that this ARR is what it really means to us. But in a world where you have seen all these pitches where the revenue they call ARR has a lot more risk and volatility related to it, how are you thinking about valuations? Like you hear these crazy valuations right now in the market for companies that I find are usually in the spots where AI has the most product market fit. Like AI is going to impact the whole economy. Yeah. In some parts of the economy or some parts of our organizations, what it can do for us today is really, really good. Think of, support. Think of code generation. That's where it has the strongest product market fit. And so those companies should command a higher valuation because they can provide more value to whoever buys their tools. And so you hear these crazy valuations over there. And I think where there's some confusion amongst early stage founders who are going and raising money is, what is actually reasonable if you're not one of those two things? How should you be thinking about multiples today? So in your world, how do you view multiples? Like, what is reasonable, what is not reasonable for a seed Series A type of company?
Yeah. So first of all, multiples don't really work for seed and A because there's not a lot of revenue.
Yeah.
You know what I mean? So you have to abandon multiples. There's a market dynamic that will set the price. And it's like appraisals. You look at a home that sells. This home sold for that price. This home sold for that price. What makes this one worth more than that one? Right. So I would say that comp methodology is probably
so with momentum more than anything.
And then what caused that to, well, it's net present value, the future growth opportunity. Well, how did you forecast the cash flows? You're saying, is this a big market? Is this a disruptive change? Is this a great team? Big market, disruptive change, great team. How much do I believe that? Right. And so the entrepreneur who is pitching has a big influence on that because they're going to go pitch 7, I don't know how many they're going to do, but that offering that they're presenting, which is an idea, some tech, a team, a vision, that's now going to be evaluated. And it's not going to be a quantitative analytical. It's going to be analytical, but it's not quantitative because there's nothing to calculate. It's you do all kinds of proxies. You do analogies. You do well. Has anyone in that AD identity? Is identity a good market to be? Yes, it's a great market. Okay, is it sales support? Is it you're trying to find a proxy to say, is that a big market? And then does this team have something that's like a feature? Is this a feature? Is this, though, a well thought out insertion product that can have adjacency and create the platform? Everyone says they're a platform, but some don't have a coherent way of describing how they're going to become a platform. And you need to start as a product, not as a platform.
So it really comes down to like people, market, and their ability to create momentum when they're raising money. Like if I can have 6 or 7 investors excited about me because of the vision I'm selling and the competency I am showing, I'll get high market value. And if I can't do that, if I'm like mumbling and stumbling through my pitch, if my vision is, this little wedge, I can't show how it becomes a massive organization. If that's the case, then I'm just going to struggle raising money.
Yeah. Yeah. And there's points all across there. And, look, if you're in cyber, there's a series of ways that people think about cyber. If you're in a collaboration, there's a ways in which we think about collaboration. And then ultimately you look to the public markets, right? And you go, what are the proxies for attacking this in the public markets? Because there's multiples. Now there's, real multiples in the public markets. I'm going to go create a new router, right? An AI router. Well, you look in the multiples for networking companies, and the multiples, they're not amazing.
Not that exciting.
Arista,
they don't keep you up at night.
Do you worry about?
So you kind of go by Does that make sense? You're
Yeah.
influenced by
My
what
question,
happens.
like the following question is, because it depends who you talk to. Some investors say, listen, entry point matters. And some say, I've never worried about the price I paid at an early stage because it either works or it doesn't. Where do you fall on that debate?
Oh, I mean, look, if you knew you were going to invest in Google or Microsoft, entry point doesn't matter. I doubt if you get us all privately that we have that kind of conviction on every matter.
Yeah,
So
fair.
price entry point matters because it's only, you're struck by lightning level of, where you're like, this is Microsoft,
Yeah, if it's 1,000x return, then maybe it doesn't matter. But in many other cases, it matters.
The vast majority, it's going to matter. And there's going to be a point where you're just like, the risk reward relationship in that person's mind ends, right? It's, the risk reward, it's out of whack. So I'm done. I'm not priced any higher. And so that's why you have the marketplace. That's why you have the marketplace decide the fuzzy logic on where that is.
Within this, there's this related question of how much money should I be raising, right? So on one side, you hear that these companies today will need more capital than ever before. And yes, investors, many people say raise the least amount of money to get from here to there, sure. But beyond that, there's this thought process that these companies will need less capital. On the other side, OpenAI is going to be the most capital intensive organization in history, right? From a venture funded perspective. And so curious how founders should be thinking about this now. Like there's these conversations happening where some people are saying, you know what, go raise a seed round. And then you don't really need anything after that. Sell them the big vision, do all this stuff, tell the investor you're going to do all these things, but get the seed and then you can kind of run and do your own thing. And others are saying, no, like you'll need the same capital, because what you're not understanding is that the amount of product you had to release to create momentum in the past and have high retention, now you probably have to create 3 to 4x that amount of product to be able to do the same thing. And that's going to cost you. It's going to cost you. It's going to cost you to even hire the people that are good at using AI. Like it's not going to be cheap to get to $100 million compared to the past. Where do you fall on this debate?
Yeah, this is one of those historical truths. Competition, right? It's a race. If you have a great idea and you're unique in your idea and no one knows about your idea, you can build it methodically. But the moment it's obvious and now there's 7 different competitors and 7 different tier 1 venture firms throwing money into it, now it's a race. And what's the race? Is the race just to build product? Well, I guess in some markets where it's so product-led growth that customers just buy it from the bottom up and just use it, maybe it is just product.
It's the race to commercialize.
80%
race
product,
to build
right?
a brand.
But to the extent you're going to have to engage a go-to-market motion, and there's now a race to get to the buyers, that's not cheap.
And go-to-market is getting more and more expensive over time.
And so
for precisely this reason.
Yeah. So if you can do it efficiently because you're an AI native person and you figured out how to attack the market with AI in addition to AI in your product, do you follow me? Where it makes you develop faster, but you also have AI in your go-to-market, and that magically has allowed you to go to market faster. Then I think theoretically, yes, you can do it faster with not tons of money.
But the chance of that being possible is like the chance of me becoming 7 foot tall tomorrow, right? Like it just doesn't feel very realistic.
You're probably going to need money. That's my probably. Now, are there examples of 50-person teams ramping to hundreds of millions of dollars? Yes.
But that example is, I think, what is deceiving a lot of the market, because that example is in this one use case where AI is so powerful, right? Like code generation is the most powerful use case for AI. It has fundamentally changed the job of an engineer from writing code to now reviewing code. Like it's shifted it. It's completely shifted it.
You're correct.
There, of course, you see that. But even then, when you talk to these companies, like look at Codium. Codium just is going through this acquisition talk with OpenAI. They have an 80% go-to-market team. Yeah, like
that's
legit. Yeah, it's a proper, like they had 40 million in revenue. They've gone from 0 to 40 million in 4 months. They have 80 people in go-to-market.
Yeah. I just don't even believe any of those numbers. I don't believe it. I don't believe they've gone to 0 to 40 million in 4 months. I don't believe that. I'm sorry.
Just remember in the internet era, right? There were companies that flashed, right? And then they were episodic, right? They
Yeah.
flashed. And then
I mean, the trick
there was
is
no ability to endure. Competition came. Suddenly they didn't really have the uniqueness. They were first, but they couldn't turn it into a brand and distribution advantage. So, the episodic nature is part of the struggle for us investing in some of those companies that look like they're rocketing.
Yeah.
I mean, that's the time to sell.
Whoa.
They're definitely selling at the right time.
I don't know if there's differentiation. I don't know.
I think, Asad, to your point, like, it's not about, I think capital is an input. It's just, I just don't know that it's always the fundamental constraint. It's a race, but within a certain set amount of capital, there's 50 different ways to approach a go-to-market motion or to approach a product development motion. So it's not necessarily solved backwards from whatever term sheet is offering you the most money. It's probably, whatever. I mean, there's this theory of helpful investors. I bet, Eric, you're one of them, having run a business and been an operator. There's probably some combination there.
I guess there's also this fundamental choice a founder has to make as to what race am I running? There's two races. Are you trying to get rich or are you trying to win a category? I think if you're trying to win a category, the amount of money you'll have to raise will probably be analogous to the way that you had to raise before, like closer to that than to what you hear in terms of raise a seed round, gain some, and you'll be fine. I think if you're trying to get rich, you could get rich like building a company that gets to 10, 20 million in revenue and sell it for a nice multiple and make a bunch of money. And over there, the capital requirement might be a lot less because you're not trying to win the category.
But you may not get that tier one investor because you're not aligned with the goal.
But they won't tell you that. They want to sell you a story, right?
Yeah, but I think investors are probably...
That's the game, right?
Yeah. Eric's job is to call BS.
Yeah. I mean, look, there's nothing wrong with either a boutique business, a lifestyle business, or a business that you flip quickly and you end up making yourself $40-50 million, right? It's just, you don't really want to be with the tier one venture firm who has an expectation of 100x. Yes. You know what I mean? Because the pressure, the intensity,
I think is a really interesting point. Like, you as the founder don't even want them. Like, they don't want you, but you also shouldn't want them, is an interesting point. I guess that the founder, you as a tier one investor do not want that founder who is just trying to get rich. You want people that are trying to change the world and build massive organizations where you can get the type of return you're looking for. But that founder also, when they're going out there and raising, they shouldn't be trying to get you either, because there is a pressure that creates where you have a tier one investor on your cap table. You might have sold them this story, but then they will make you they'll need you to follow through on that story, versus if you get a tier 2 or tier 3 investor, you might be able to play this other game a little bit more.
Yeah, those don't work out very well. There's all kinds of, it's like when you create two founders, they come together. They weren't aligned when they came together. So about a year or two in, there's just, and it blows up, and it's not pretty for anyone. And so my encouragement to all of it, is trying to snow someone is just not a great way to live your life. You know what I mean? It's just, you're going to have downstream conflict. I guarantee it.
Yeah, that's a great point.
Which you don't need to have if you just be upfront,
Yeah.
We're almost at the end of our time together, Eric. What we like to do before we go is try to pay it forward a little bit and figure out, influences, great mentors, great leaders, great books you've read. If there's a common piece of advice, it's sort of a meme sharing segment where we try to pay it forward a little bit. What's a great idea or a great person you think we should follow that's sort of been inspiring you recently?
Oh, some of them are a little more humanitarian.
That's okay.
That's good.
It's probably not, you probably want to edit this out.
We like this.
I'll say it and then you can edit it out. But there's, I am inspired. Stage of life, you guys. Stage of life is a little different. So I am currently inspired by a guy named Gary Haugen, who is the founder of an organization called International Justice Mission.
Interesting.
And he, in 1997, was deployed on the part of the United Nations, on the part of the Department of Justice, to investigate crimes against humanity during the Rwandan genocide. Wow. And from that, he created an organization that tries to bring justice to the poor in a variety of countries. So human trafficking and slavery, and online sexual exploitation of children, all of these things. He has been, in his quest over these past 30 something years, has sort of grabbed my attention. And you asked for a quick response. That's
No, that we're not editing
That's
that
beautiful.
out. What's Gary's last name again?
Haugen, Haugen, Haugen.
Haugen, Gary Haugen. Awesome.
I mean, I have lots of, wisdom of the ages to give, but I don't know that you want to hear me just list that. But that was my quick response.
We love it.
We love it. We validate it. We support it. We endorse it. Eric, thanks so much for being a guest on Top Line. It was great chatting with you.
Great chatting with you.
Great, Eric. Thank you.
Are you a B2B tech CRO, VP of Sales, or VP of Revenue Operations? Join over 200 of your peers at CRO Summit 2025, a one-day executive-only event designed to help you tackle the challenges of today and position you for growth tomorrow. Hosted at the Denver Art Museum, this summit combines cutting-edge insights and actionable strategies. Learn from industry pioneers covering all aspects of sales and revenue growth into 2026 with sessions from Andrea Kayal of Help Scout, Guy Rubin of Ebsta, Wendy Sturgis of Cleverbridge, and more. Visit joinpavilion.com/CRO-summit to secure your spot today.
Welcome back to Top Line. Thanks to our sponsors for those great messages. We are back, and we are back after that great conversation with Eric from Accel. And in his place, a lesser man has stepped in. His name is AJ Bruno.
I was here the whole time. Sam, I was a part of the episode the whole time.
Just silently standing there.
No, my internet wasn't working, actually.
Silence is golden. He's so smart, he doesn't say a word. He just judges and observes in the background.
Yeah. When we now have a Top Line GPT that all the transcripts, Josh has nicely uploaded it. And I asked GPT who the best co-host was. And GPT does this thing where it's like, it doesn't want to tell, if it's not you, it doesn't want to tell you it's not you. So it like put this nice, and then it didn't really, it said all three are really great. I was like, no. You don't get out of this so easily. I had to push. Yeah, I had to push to get, yes, it was Sam's name that came out of it. But I'm pretty confident Josh just buried that somewhere in like the transcripts, like somewhere. It was just like, and then Sam had this amazing insight and really great point, and didn't go off on a monologue.
I'm the glue.
The glue.
Yeah. Well, that's because
how does this GPT, have we given it all the transcripts, or it just naturally, like, you can search OpenAI and it has?
I think Josh created a GPT and actually gave it to them. So gave it to them, our overlords. And so you can search it. And these are really cool. You can like, tell me all the episodes where we talk about, is cold calling dead? And it will just pull it up. But it has all the spotlight episodes and the hotline episodes too. So it's really cool.
Interesting.
It is really cool.
Yeah. Come join our Slack channel, and I'll drop it there. I don't have permission to do that, but I'm going to put it there anyway.
Why would anybody not be in our Slack channel at this point? It is
because we don't really promote it.
There we go. That's a good reason.
But it is a great place to be. It's genuinely a great place to be, especially since I spend less and less time on LinkedIn. I love jumping in there. There's always something interesting.
Yeah. So tell me, how was the episode?
What did you think of that conversation with Eric from Accel? That was his name, right?
It was, yes, that was his name.
He's a nice guy.
Eric was fantastic. AJ, we spoke about a couple of things. We spoke about this idea of an AI first company. What is it? If people are saying that these companies command higher valuations and just have a better shine than everyone else, then how do you define it beyond revenue per employee, which is a lagging indicator? How else do you define it? So we spoke about that, and he seemed to agree with our premise that it's probably the volume of product you can ship out and the pace at which you ship things. That's probably a clean indicator of whether or not you're using AI in a way that's genuinely beneficial to your organization or not. And then we spoke about something that would love to get your thoughts on, since you've gone through this process in the past, which is raising your first couple of rounds. And the point Eric was making was that at that stage, you really don't have much to latch onto in terms of traction or even in terms of the product. These companies are super nascent, and really raising investment comes down to your ability to create momentum. And I read that as your ability to make good investors feel like they're missing out and some other great investor will take this if you don't jump in. How does that compute with your experiences?
I think it's actually kind of funny that you're saying this right now, because we were talking about this before the episode started, and I didn't connect the two, but literally right before this conversation, one of my co-founders, Eric, was dropping our usage of QuotaPath into our Slack founder Slack channel, and he had it took 100 days. It took 500 days to hit 1,000 monthly active users, 200 days to hit 1,000, 100 days to hit 3,000, 200 days to hit 4,000. And then we had a lull, and we had a 600-day lull from November 2022 to July 2024 to hit 5,000.
Interesting.
And now we've sped it up, and now we're hitting thousands of users every 30 days.
Monthly active users?
Well, I'll get to that in a second. That's a different question, Austin. But let me answer the question in terms of fundraising and momentum. What? No, one question at a time, Austin. I looked at this chart where we had the most momentum in usage, where our users were doubling, and then when it kind of fell off a cliff and we hit this our 2023 was just, as I've talked about previously, really challenging. I signed a term sheet at the very peak of our usage doubling. I'm not even kidding. I'll send you guys the text. I'll text you the chart that looks like this. It goes straight up.
Series B.
Signed the term sheet right at the top, and the bottom fell out right there. So this idea of narrative and founders being able to tell a really strong narrative on momentum is really important. And I remember getting texts from the partner that did the deal of just he was texting back and forth with the managing director, and he was just look at this awesome growth on usage and users. And I was because we were telling a product-led growth story. And for PLG, that's massively important to show it. And we then had to take a step back and relook at it. So you want to feel like they are getting FOMO if they don't get in now. And this idea of momentum is really important. And then how does that relate to AI and what we're seeing today in being an AI first company? I feel like momentum's really easy to fake in AI. And I don't know what that looks like yet. I have this.
That's interesting. What do you mean?
Well, I have this thesis that all of these companies that you're on the hype train about, Asad.
Asad is really on the hype train too. Asad's it's these are the new
Cursors, 5 people and $700 million.
Yeah, Asad's seen one infographic, and that's just his talking point.
I'm with you guys.
Yeah. So I think my hot take is that these companies that are doing $100 million with 27 people aren't going to be around in 18 months. Literally. They're either going to get swallowed up pretty quickly if their founders are smart. If you're out there and you have one of these companies and you're getting offers and you're no, I don't want to do that. I'm not going to do that. Take it. Don't do that. We've all been with founders who have had momentum and they have M&A and they pass on it. And then just this week company, it was the first YC class, Y Combinator class ever. I won't name the company. That was in 2008. They are now doing $200 million, $15 million in EBITDA. And the founder had many, many times he could have sold it for 400, 500, $1 billion. I will actually even tell you that.
But then there's Meta that could have sold for $1 billion.
Yeah. And you know what? Whatever. Right? Yeah. But the guy, I'll just say it this way. He was just voted out. He was just kicked out of his own company. And he will probably make $20 million out of it. He had the chance to be worth over $500
many millions along the way as well. He was probably making a really good.
He got $1 million severance. Who cares?
I think you're just listen. Asad, AJ's point. Yes, there are metas. I think the difference is always what perspective or vantage point are you coming from? Are you coming from a venture power law perspective, or are you coming from everybody else? Because it's sure, Meta is worth $300 billion or whatever it's worth today, or $1 trillion. And in venture world, like that is anecdotal works in venture world because they work on power law dynamics. But for the rest of us running regular businesses, there's this concept, Jason Lemkin, I think, wrote about it, this concept of local maximums. But like which is AJ's point, at the moment of peak, peak hype, and we talked about this before. I think we talked about this when we launched the podcast, that there's been some analysis in that. I think Gurley or somebody said that most of venture returns over the last 20, 30 years come by getting liquid in the hype cycle, like getting liquid at the peak of a bubble. And if you don't get liquid in the bubble, which is another way of saying if you don't get liquid when you have the most momentum, then things often change. And I certainly, for not that I'm selling Pavilion, but were I to be interested in selling Pavilion, what I would do, which is sort of the point of these AI companies, what I would do, for example, is I would launch a more premium membership tier like Pavilion Gold that is much more expensive. And I would juice ARR before those cohorts really seasoned and we understood their retention dynamics.
Yeah.
And so which is what Chief did, right? They had a bunch of people sign up. They quickly got to like 100 million in revenue or 70 or 80 million. And then churn kicked in. I'm sure they've been flat for years at this point, but they raised money on the way up. Now they didn't sell the business, and I'm not sure that Carolyn or Lindsay, I hope they did make some money because they deserve it for building something meaningful. But that is how you do it. You have to get liquid on the way up, and you have to have a sense for that timing, in my opinion.
I think.
Well, and look, first off, this is why GPT thought Sam was the best co-host, because he takes the jumbly gook that I say, and then he's like, "Well, what I think AJ's actually saying."
This is what he means.
Yeah, and then has those great insights.
Okay, let me push back on this a little bit, though. I think it comes down to, for the sake of the argument, it comes down to the founder. What are you trying to do? If the founder has set out to try to build one of these world-class companies, then they have prepared themselves to do things that could lead to one day in the future them looking back and saying, shit, I should have sold at that moment. There will be many people that go for the win who are trying to create a legendary company that will look back. Probably the majority of those who try will look back one day and say, I could have sold then and been a centimillionaire and been living a really good life, and look at me now. But that's what they're trying to go after. There are other people that are playing a different game, which is they're balancing a few different things. They want to build a good company. They also want to get really rich. And for them, there's a different strategy that they want to implement. And that strategy is probably the one where you build momentum, wait for the peak of the market, get out at that point, right?
Yeah.
And maybe you do that, get rich, come back and build something else. There's many ways to play the game, but it does come down to what you're doing. It's not so absolutist in my mind that there is one ideal way. It's like, who are you and what are you trying to do?
Yeah, I mean, there's definitely not. I mean, that's, and I sometimes I talk in binary and absolutes here, and it's like, maybe it's just my feelings in general on the market in the last 2 years. But I just think that there's a lot of things that are happening right now that are changing so rapidly, so fast, that as founders, we have to take a step back and not let our egos get in the way and just really, truly understand the vision and the value of what we're building and how that has sustainability and lasting power if you have that view.
Well, I think this is where I agree with you. So, you know how you were saying you won't be surprised if some of these companies that are flying don't exist a few years from now? I think that is a really fair point, because it's a product market fit point, which is that I think companies are finding it faster than ever before, finding high levels of it faster than ever before in certain spaces. You know, we spoke about this during the episode, that AI has different levels of product market fit in different use cases. And there's two use cases where it has extreme product market fit. One is code generation and the other is support. And over there, you've seen companies go from nothing to really significant size. Cursor is the fastest company to get to 100 million, 200 million, 300 million, and 400 million in ARR. And there are a bunch of these other smaller companies.
Are you sure about the 300 and 400? You're sure about that?
I read it in the information that they got into 400.
Okay.
No, that's insane.
Because
Well,
they raised at 30 billion, I think, right now.
I'll let us move on, but I want to name drop
No,
another
just to
podcast.
finish the point, sorry, just so that it doesn't stay wild. I think some of these companies could lose product market fit faster than ever before as well.
Right.
Because the technology is changing so quickly. I wouldn't be surprised if there were companies that went from nothing to 40 million in 5-6 months, but then lost that product market fit and couldn't sustain that growth over the next couple of years. I think AI is that type of space where it's going to be hard to just say, oh, you had 40, for sure you're moving forward. Like, you could lose it really easily as well.
Well, I think about the classic example of the site Dig. You guys know Dig.
I remember
Dig had a UI change at some point when they're upvoting, downvoting system, and everyone migrated to Reddit, and then Dig died instantaneously. Product market fit gone. So it can happen. It will happen at a rapid pace. One thing I was going to say, and I'm going to name drop another podcast, then we can move on, is the Acquired podcast just did a 3-hour like world-class research on the company Epic and their founder Judy. I don't know if did you guys listen to this yet?
I've lined it up.
I'm going to just tell the audience that everyone should listen to this. And we'll talk about
AJ doing shout outs mid episode. I love AJ when he goes wild.
I'll just go wild on it. I'm an hour and a half into the 3 hours right now, and they've never lost a company in their 46-year history.
Okay, so tell us more now that we've gotten
customer. They've never lost a customer. My chart. So you all are familiar with my chart in your health. It's an EHR.
Oh wow! I know the company. I don't know what my chart.
Electronic health records. Yeah, they do $6 billion in revenue. It's private. They've never taken a dime. They've never acquired another company. They've never lost a customer, and $6 billion in revenue. And she's very, very well known. So it's basically talks about the rise of electronic health medical records in the 80s to the 90s, and the universities that were tied behind it, and how Lockheed and Boeing even were involved in this, and the competitive race that she had. She was a computer engineer, and she was, just because she liked math, went to University of Wisconsin, and that's where they're based out of today. So I'll leave it at that. But like, we talk about sustainable companies on this podcast pretty specifically with the three of ours, and how that fits into technology. That is a company that like a lot of people haven't heard of, that is just at the top of the top. And
let's build off that. Sam, question for you. Do you think this type of durability that we've seen in the past, where you would have companies that could hold on, essentially this is switching costs, product quality, these are the two things that would lead to a company being able to hold their customer for so long. Do you think that we're going into a world where that fundamentally changes, or it changes in some places, doesn't change in other places? Like companies like Epic will still be there. You get your customer, you sign them on, probably hold on to them for 20 years because the hospital doesn't want to change providers. They don't want to try something new and edgy. Like, does this change at all?
I don't know. I think every generation is going to have some great companies that are built, you know. I think, and there's always going to be a few. And I think to your point, Asad, there's a wide spectrum of outcomes that people desire. And I think it's up to us. I think the cool thing about this show is that you and me are building. AJ has a long-term perspective. I don't know that QuotaPath will be a generational company, in the sense that I think it'll get acquired at some point for a lot of money. And AJ probably has other things he wants to do, like run for office, in his local district. And maybe the
Sam's
Senate.
going to be my chief of staff from Barcelona in this
maybe
world.
I will be. If I give you enough money, I just want to be ambassador to Chile in about 15 years. I want to live in Santiago with my kids and my wife. And, you tell me what the U.S. policy agenda is, and I will prosecute it on your behalf.
I got this.
But I think, Asad, you've talked a lot about how you're building like a craft business, that you don't want to sell it, that you like what you do. And yeah, you want to be a little bit more famous through top line, and, get to meet cool people so that we can get Mark Andreessen on the show, or Aaron Levy. But I think you have a long-term focus, and I think I have a medium-term focus. And I think I'm probably in the middle between, you and AJ, which is that I'm open to liquidity, but I understand what it's going to take to build something. That Pavilion is the kind of business that is going to take a long time to get right. And fortunately, we're profitable and in a strong position, so we have the time to get it right and to focus on building it. So are there going to be companies that emerge that are generational companies? Yes. Are there going to be flashes in the pan? 100%. Are there going to be bubbles and 28-year-old founders that think that this time they've truly figured it out, and then a couple months later, years later, they're kicking themselves that turns out they didn't figure it out and they didn't build for the long term? Yeah, I don't know. I think the rate of change might increase, but I don't think that the nature of what I think is required is wisdom for people to have, like, this is, ChatGPT said, I'm the soulful one. And this is me being soulful again, which is, I think that you need wisdom on what makes you happy. And I think when you're young, you think that some kind of outcome will make you happy. And as you get older, you realize that it is, I sound so cliche, but I truly mean it, that the journey is the thing that makes you happy. And, a couple years ago, I had a lot more money, and I went from having no money to having a lot of money very quickly. And I realized, and it sounds so cliche, but I realized it doesn't make you happy. And I was on a run this morning with my friend who's visiting me here in Barcelona, and we were in the hills above Barcelona, and it wouldn't matter if I'm worth $1 billion or $500. I was on a run with my friend having a great conversation with a baby at home and a woman that I love. And it doesn't matter about money. And my point is that informs the time horizon that I have around how long it's going to take to build Pavilion. And I don't need to do anything with it. So how long is Pavilion going to be around? There's a chance it'll be around for 100 years. And there's a chance that it'll get swallowed up by Gartner or Forrester or Vistage or any one of another company in the next 5 to 10 years. And I can't really say for sure, but I can tell you for sure that I'm having the most fun building it that I've had in a very long time. That got to count for something.
Sam, I think your point is around this. Look, these three things have been true for the eternity time of building businesses, and regardless of AI or other external factors, they're still going to remain true. And it's really up to the founder, and from a vision standpoint, they have to just really ensure, and it might not always be clear on a daily basis. I know for me, it's not always clear, but on a month to month or year to year, just understand what you're playing for. How do you win as an organization? And personally, how do you win? How are you going to find that fulfillment?
It's so hard to know that stuff.
So tough. It's so tough. We're talking about really challenging problems. Like even at the beginning of this week, I had a board meeting at the beginning of this week, and afterward, I know I talked to you guys. I think the board meeting itself went well, but coming off of what the macro looks like and some of the Q1 challenges for us, it did put me in a tougher feeling of about the world. But then I had we had this magical moment with one of our customers yesterday that is recorded that said hey, QuotaPath was more accurate than Salesforce.
Let's go.
Pennies. And this is, by the way, this is an 800 rep organization. No questions from account managers, no questions from the sales reps. And we took this as a managed service almost, but more accurate than Salesforce. You take that and you're like, holy.
In what way, AJ? Tell us a bit more about that. In what way was it more accurate?
So they, this is and I'll send you guys the quote afterwards, but the quote was, Salesforce, when we did this manually before, all the data was pulling through, we were getting within $100, $200. You guys were within 3 pennies. 3 pennies. Someone got overpaid by 3 pennies. I'm sorry.
I'm thinking, AJ, you've got your birthday coming up. You got this beautiful house in Pennsylvania. You got this beautiful pool, and you got this great family and this wife that loves you, that builds out your office for you and gives you surprise little gifts. And it's what would be different if you had $200 million liquid?
I'd be on that run with you in Barcelona.
More
I would have been on that run with you this morning in Barcelona, Sam.
It's an interesting exercise because there's obviously a lot of data that says that earlier on in your accumulation of resources, early on, these $10,000 increments can have massive a massive impact on your quality of life and on your happiness, because you're taking away certain stress points. Like when you're at 40,000 versus 70,000, you're living a very different life. And so you're less stressed and you can be more happy. But past 100,000, the jumps have to be larger and larger. And really, I think once you're in a couple of $1 million worth of net worth, from there, you would have to jump so significantly for a huge shift in your quality of life. And that might or might not give you anything, because along the way, you're going to accumulate more stress and more anxiety while you're accumulating those resources. So there are like these sweet spots. And for some reason, people don't think of the sweet spot. Like once you've got momentum, you just want to like hoard as much as possible, get as much as possible. And I'm sure there's a lot of psychological reasons for that. But there's like actually these sweet spots where if you kind of optimize for that, you can live a really good life and be really happy and be running the hills of Barcelona with a smile on your face, because you've got there's more texture in your life. You've got the whole holistic thing going on versus like one element is winning.
Did you guys think we were going to go so deep into this episode philosophically on life in the 30 minutes that we had together today?
I think, we're a couple of great guys talking about real stuff. I think, but I think, Asad, I think you're right. And I think what happens when you become wise is that you become centered, and you're like, well, what do people want to do? It's like, well, I want to spend time. I want the freedom to decide how I spend my time. I want to spend it with people I care about that like bring nourishment and great relationships and love, like you guys. And I want to build cool stuff, and I want to leave a legacy through a family, and like, those are the things. And I don't need $500 million to do those things. So
I think it's really hard sometimes for some of the people that become entrepreneurial and take those paths, because I think they come from these really tough backgrounds where there's something that's making them pursue this thing, some type of pain that is giving them pushing them over the edge of like, I'm going to go and try and really fix my life, build something great. I want to go after this. But there's a lot of work and that's a really good ignition point, is like you've dealt with some hardship. Maybe you grew up with very limited money around the house, and you saw all the stress and anxiety across your family. And you're like, I'm going to change this for us. And you go, and that's your ignition point. But then that's what takes you forward. This type of like sit down, ask these questions of yourself and really figure out what will make you feel fulfilled, in which there's happiness and there's this and there's that. But what will make you feel fulfilled? That's a really hard question to sit down and answer without some professional help, especially when you're in your early to mid 20s, where a lot of founders are. And if you don't figure it out relatively early on, the work becomes more and more to do it. And you might find yourself in a really unfulfilled place where it becomes really hard to dig out of that. And so it's hard. I think it's hard because of some of the starts people have. But hopefully places like Pavilion will be places where you can get some of the ideas on, you can understand that it's fulfillment that you're solving for more than just being rich. Absolutely. And then you can meet people that you feel have that shine in them and find out what made them that way. And that inspires people to ask those questions of themselves. I think this is where communities can really stand out.
Yeah. Agree.
I hope so. Well, we're almost at the end of our time together. Asad, do you have a question you'd like to ask us, or we can do shout outs or wins of the week?
Let's do shout outs.
Okay.
Yeah.
AJ, go ahead.
I'm going to shout out the Pavilion community, Sam. We are, and a secondary shout out goes to Asad, but the first shout out will go to the Pavilion community for our VP of CS hire. We are we're halfway through this process, I'll call it, and have some great folks, and a lot of them have come through the Pavilion community, and it's easy to get references as well if they're in the Pavilion community. So I don't want everyone. I just wanted, it's just really easy. So one thing that makes this easy is if on LinkedIn you have like your Pavilion status, and then like I see someone's connected to someone else that I know, I've just reached out to like 4 or 5 people that have had that to get back channel references on some folks, and it's been great. So shout out there. And I'm going to give shout out to Asad as well. I am working through like some of these candidates and thinking about questions to ask. And he was really good yesterday. I was on a run and talked to him while I was on the phone. He's called me a bunch of times and I've ignored him, but he finally got me on the phone.
I call you guys like twice a day.
Yeah.
I'm a calling type of guy. I have switched. I don't text message. I just call people. It's way more fun.
So I asked, so there's like a question of like, would you work with this person again? That's a general reference call. And Austin's like, don't ask that question. It's not a good question. In what cases would you not work with this person?
Oh, I love that.
On a scale of 1 to 10, like give me, so if you had a conflict, give me a time where that was, I don't know, Austin, you tell me the question. You had like this scale.
You had a question around conflict. So rank this person on a scale of 1 to 10 in managing conflict within an exec team. Around some important strategic initiative, and you usually will get something like an 8.
Much more specificity that are really interesting and actually better.
And you're trying to get these ratings to see where some places you'll get 10 out of 10 ratings, but in some places you'll get 8s, 8.5s. And then the next question is, how do you get from there till 10? And that gives you a bunch of the weaknesses a person has. I think it's like question design is a really interesting place, because through the same conversation, you can learn something or nothing.
Yeah. So I really appreciate you thinking and helping me through reframing some of the questions that are the general questions that you're not getting, because everyone's going to say, yes, of course I would work with them again. Like, well, why are you not? And then you maybe
the
can go down that path.
They care too much. They just care too much. They're too caring.
So the circumstances under which I wouldn't work with them would be if they had to do anything of significance or importance.
If my future had something to do with their performance, then
if there's anything at stake, I would not work with them.
Otherwise, every day, all day.
Asad, your turn. Go for a shout out.
What am I shouting out? I'll actually shout. I was listening to this while showering today, so I'll shout it out. There's a new show within Harry Stebbings, like 20 VC, where he has Lemkin and this other guy called Rory. I forget his last name. And it's actually really good. Like, they're doing this like weekly, just sit and talk about the market thing. And it's heavily focused on the venture world. And I thought the dynamic between the three of them was brilliant, because I heard the first episode, which was just Harry and Lemkin, and I thought that was horrendous. Like, it was really hard to listen to. Lemkin was over talking. The points were not that interesting. And it was the first of the sort. So like, you don't expect greatness, but it was pretty bad. And to go from that, like, you can see how dynamics matter. Like, this other person came into the mix, and they picked the right guy. And now the conversation went from like a 1 out of 10 interesting to like a 9 out of 10 interesting.
Wow.
And that's like, it's just fascinating to see things like this. So worth checking out for people that just want to see the delta between those episodes and the impact of Rory in there. But also, if you're looking to understand what's happening in the state of venture, that's a good place to go.
That's great. I'm going to listen to that. I'm going to shout out a guy. Not a lot of people know this guy. His name is Alex Ovechkin. And earlier this season, he broke Wayne Gretzky's record for the most goals ever scored by an NHL player. And then,
which, by the way, they said was an unbreakable record.
Unbreakable record.
And he broke
then at
it.
Monday around 4 a.m. So it was really Tuesday morning, 4 a.m. When Rose was up and anxious and wanted to be an active baby. I got to watch him score the game-winning goal in Game 1 against the Montreal Canadiens. Your neighbors, Asad, les habitants, or the Habs, as we call them. And when he broke the goal-scoring record against Gretzky a couple weeks ago, I actually began crying pretty materially. So, you can call it sobbing. I don't know if it was sobbing, but I was crying a lot.
Sam, were you actually a hockey fan? I didn't know you were a hockey fan.
I'm a huge
Sam's
hockey
a soulful
fan.
guy. He likes beautiful moments. Like,
well, also the Caps just represent a lot to me because they didn't win for a long time. They didn't even advance past the second round of the playoffs. until 2018. And there was a lot of talk that, Alex, that Ovechkin could only score goals, but that he wasn't a winner and he wasn't a leader. And there was controversy around him getting the C on his sweater, the C for captain. And, is he really a captain, or is he doesn't play defense? And in 2018, he was the best guy on the ice, throughout their Stanley Cup run. And he's 39 years old, and he had 7 hits. He had 2 goals and an assist in game 1. It's just inspiring. He is, and it's inspiring to watch a team. I just like team sports, and I love sports because sports tell stories about what's possible. And I had a dream a couple months ago that the Caps won their second cup this year, and now we're in the playoffs. They're up 2-0 against Montreal. Tonight they'll play again for game 3. When you listen to this, we'll know the outcome of it. We'll probably know the outcome of we might know the outcome of, no, we won't, because it'll be Sunday. So when you listen, we'll be playing this evening. But anyway, sports inspire me. The Caps inspire me. Ovi inspires me. He's a great guy. He's a great teammate. He's a great father. He's a great husband. He is a Vladimir Putin supporter, so we'll forgive him for that. But otherwise,
should I have, well, barring that last point, I was going to ask, should I have a joint 40th birthday party with him?
That would be great. That would be great. I mean, because
he'll be turning 40 soon, right?
He'll be a 2-time Stanley Cup champion at that point.
I mean, yeah. And then I'll be the headliner, 2-time Stanley Cup, and AJ Bruno, co-host of Top Line. So there you go.
I think this is a really cool story. I love that in sports you have these turnaround moments that you see so often in team sports. And I have found that in CROs who come from an athletic background, there is usually a higher belief in the ability to turn something around. And sometimes that works in their favor and sometimes it doesn't. But I like having that belief in my organization. Like, you're a couple of days away from quarter end, there's a bit of a delta there, and you're like, no, we can turn this around. Like, you want that in your company.
Not just that, but also like, what are the ingredients that lead to championships? Because again, I will tell you that over the last couple of years, my teams are the Washington Nationals, who won the World Series in 2019, the Washington Capitals, who won the Cup in 2018, the University of Virginia Cavaliers, who won the National Men's Basketball Championship in 2019. And I can just tell you that I've seen what it takes to win a championship, and the number, obviously you need the right talent, obviously you need the right buy-in, but fun is a huge part of it. You see certain things happen during the Nats when they won the series. They had this baby shark moment. Anthony Rendon and I think Howie Kendrick, and I believe the number 2 batter, I forget his name right now. Anyway, they had like all these rituals, these funny jokes that they would do. Barry Trotz, when the Caps won the Cup in 2018, he would like do this lap every day around. At the end of practice, he would do a sprint around the rink. Like, when be on the lookout for fun rituals, and when they emerge, that is the sign that you're onto something great. If you're not having fun, it's really hard to win. And obviously, these things are connected, and winning is fun, and fun is winning. But having fun is a big, big part of being a champion.
What a great way to end an episode. Good work, Sam.
God bless all.
Again, GBT, just looking for more data on why he's the best co-host. I get it.
So let's go have some fun, and let's go Caps. Have a great day, everybody. Thanks for listening.
Bye, everyone.
Bye, everyone.
Thanks for listening to Top Line. New episodes come out every Sunday. If you like what you heard today, subscribe so you never miss an episode, leave a 5-star review, and share it with your friends. Don't forget to join our Top Line Slack channel to connect with us and discuss the topics we cover with other listeners. Click the link in the show notes. Lastly, if you're interested in joining Pavilion, you can learn more about membership at joinpavilion.com/membership. Thanks again for listening.